Imagine a young boy in Omaha with a notebook in hand, counting coins and calculating profits, a mind already primed to see patterns in numbers where others saw only randomness. This boy grew up to become one of the most successful investors in history, a man whose disciplined approach to finance and patience in the face of market chaos would earn him the title the Oracle of Omaha. This is the story of Warren Buffett, a visionary whose philosophy has shaped generations of investors and whose empire stands as a testament to strategic thinking, discipline, and timeless wisdom. Warren Edward Buffett was born in 1930 in Omaha, Nebraska, into a middle-class family with a modest but supportive upbringing. His father, Howard Buffett, was a stockbroker and later a U.S. congressman, which exposed young Warren to the world of finance early on. From a very young age, Buffett displayed a fascination with numbers and a keen entrepreneurial spirit. By the age of 6, he was already selling chewing gum, Coca-Cola bottles, and magazines door to door, learning the value of hard work, persistence, and profit margins firsthand. Even as a child, Warren was driven by an insatiable curiosity about how money worked. He absorbed books on finance, economics, and investing with a voracious appetite, often staying up late to study ledgers and stock reports. His first stock purchase came at the age of 11, when he bought 3 shares of City's Service Preferred for $38 each. Although he sold them too early for a modest profit, the lesson would shape his understanding of patience and the importance of long-term strategy. It was the beginning of a lifelong journey into the intricacies of investing, a journey guided by careful study and unwavering discipline. Buffett's formative years were further shaped by his education. He attended the University of Nebraska, where he studied business administration, and later Columbia Business School, where he had the opportunity to learn directly from Benjamin Graham, the father of value investing. Graham's teachings left an indelible mark on Buffett, instilling in him the philosophy of buying undervalued companies with strong fundamentals and holding them for the long term. Graham emphasized the importance of intrinsic value, margin of safety, and disciplined investing, principles that Buffett would carry forward into every venture he pursued. After finishing his education, Buffett briefly worked for his mentor Graham before returning to Omaha to begin his own investment partnerships. Using capital pooled from friends and family, he launched Buffett Partnership Limited in 1956. His approach was meticulous. He analyzed companies not based on market trends or speculation, but on earnings, management quality, and potential for sustainable growth. The early years were marked by modest but consistent returns, and Buffett quickly built a reputation as a disciplined, patient, and highly intelligent investor. The turning point in Buffett's career came with his acquisition of Berkshire Hathaway, a struggling textile company. Initially, it seemed like a simple investment, but Buffett saw the opportunity to transform the company into something far greater. Through strategic acquisitions and the application of his value investing philosophy, Berkshire Hathaway evolved into a global conglomerate. He acquired companies like Geico, known for its efficient insurance operations, See's Candies, which provided strong brand loyalty and cash flow, and BNSF Railway, which expanded his reach into logistics and infrastructure. Each acquisition reflected Buffett's keen eye for businesses with durable competitive advantages, predictable cash flow, and competent management. What set Buffett apart as a CEO was his unique leadership style. Unlike many corporate leaders, he allowed managers to run their companies independently, giving them autonomy while providing capital and strategic oversight. This decentralized approach created a culture of trust and accountability, attracting talented leaders and fostering long-term stability. He avoided micromanagement, understanding that preserving the integrity and vision of each business was more valuable than imposing control. It was a model of management that combined faith in human capital with strategic foresight. Buffett's investment strategy was not about chasing trends or market hype. He believed in the power of compounding and the value of patience. Over decades, he demonstrated an uncanny ability to navigate financial crises, economic downturns, and market bubbles. He famously advised, "Be fearful when others are greedy, and greedy when others are fearful," encapsulating his contrarian approach to investment. This philosophy guided him through volatile markets and allowed Berkshire Hathaway to grow steadily into a powerhouse with a diverse portfolio spanning insurance, railroads, consumer goods, and more. Beyond his business acumen, Warren Buffett became a symbol of financial wisdom and integrity. His annual letters to shareholders are widely regarded as some of the most insightful in the world of finance. They combine technical analysis, personal philosophy, and practical advice, offering lessons not only on investing but also on life. Buffett's emphasis on ethical behavior, transparency, and humility set him apart in an industry often criticized for short-term thinking and speculation. Buffett's personal life is a study in simplicity and focus. Despite his immense wealth, he has lived modestly, residing in the same Omaha home he purchased in 1958. He has avoided the ostentatious lifestyle often associated with billionaires, choosing instead to invest his time in learning, mentoring, and philanthropy. His lifelong partnership with Charlie Munger, vice chairman of Berkshire Hathaway, is legendary. Together, they have built one of the most enduring and respected investment empires in history, blending intellectual rigor with practical decision-making. Philanthropy has been a defining aspect of Buffett's legacy. He pledged the majority of his wealth to charitable causes through the Giving Pledge, a commitment he launched with Bill Gates to encourage billionaires to give away the majority of their fortunes. His approach to giving mirrors his investment philosophy, strategic, deliberate, and focused on long-term impact. Whether supporting global health initiatives, education, or poverty alleviation, Buffett applies the same discipline and foresight that made him successful in business to his philanthropic endeavors. Buffett's influence extends far beyond his financial achievements. He has become an educator to millions, demonstrating that wealth is built not through speculation or shortcuts, but through knowledge, discipline, and long-term thinking. His insights on corporate culture, management, and ethical investing continue to inspire entrepreneurs, investors, and leaders around the world. The annual Berkshire Hathaway shareholder meetings, known affectionately as the Woodstock for capitalists, draw thousands who seek to learn directly from his wisdom, reflecting his unique ability to make finance accessible, engaging, and meaningful. Critics and admirers alike recognize Buffett's ability to combine intellect with character. His life demonstrates that sustained success is rarely a product of luck. It is the outcome of preparation, analysis, and patience. He has navigated complex markets, evolving industries, and economic cycles without compromising his principles. His story shows that a disciplined mind, guided by ethical considerations and an understanding of value, can create not only immense wealth, but also enduring influence. Warren Buffett's approach to investment is deeply human. He studies businesses as if they were people, looking for qualities like honesty, competence, and stability. He evaluates management teams, examines market positions, and anticipates future trends, always with an eye toward long-term growth. His focus on intrinsic value over market sentiment has allowed him to make decisions that others often overlook, turning what might appear to be modest opportunities into extraordinary results over time. The legacy of Warren Buffett is more than financial. He embodies the virtues of patience, humility, and intellectual curiosity. He has redefined the role of the investor from mere speculator to thoughtful steward of capital. His life and career prove that strategic thinking, ethical conduct, and relentless focus can create a lasting impact far beyond balance sheets and stock prices. He is not just a billionaire, he is a teacher, a mentor, and a beacon of rationality in a complex financial world. From selling chewing gum as a child to building a multi-billion-dollar empire, Warren Buffett's journey is a testament to the power of knowledge, discipline, and ethical action. He shows that true wealth is created through careful analysis, patience, and the consistent application of sound principles. His story teaches investors and leaders alike that success is not a sprint but a marathon, one built on learning, prudence, and a commitment to long-term vision. Warren Buffett didn't just invest in companies, he invested in principles. He didn't chase fame or extravagance. He pursued understanding and integrity. He didn't rely on luck. He relied on research, insight, and disciplined judgment. His life is an enduring example of how intellectual rigor, ethical conduct, and patience can combine to build an empire that withstands the tests of time, markets, and human behavior. In the end, the story of Warren Buffett is more than a biography of wealth. It is a narrative of mastery over self, markets, and principles. It is a story that demonstrates that careful study, discipline, and patience can achieve extraordinary results. Warren Buffett is the Oracle of Omaha, and the empire he built continues to teach, inspire, and shape generations of investors around the world.